Good day, and welcome to the CEVA Inc. Fourth Quarter and Full Year 2019 Earnings Conference Call. All participants will be in listen-only mode. Should you need assistance today, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star then 1 on your touch-tone phone. To withdraw your question, please press star then 2. Please note, today's event is being recorded. I would now like to turn the conference over to Richard Kingston, Vice President of Market Intelligence and Investor and Public Relations. Please go ahead, sir.
Thank you, Rocco. Good morning, everyone, and welcome to CEVA's Fourth Quarter and Full Year 2019's Earnings Conference Call. I'm joined today by Gideon Wertheizer, Chief Executive Officer, and Yaniv Arieli, Chief Financial Officer of CEVA. Gideon will cover the business aspects and highlights from the fourth quarter and full year 2019 and provide general qualitative data. Yaniv will then cover the financial results for the fourth quarter and full year 2019 and also provide qualitative data for the first quarter and full year 2020. I will start with the forward-looking statements. Please note that today's discussion contains forward-looking statements that involve risks and uncertainties as well as assumptions that, if they materialize or prove incorrect, could cause the results of CEVA to differ materially from those expressed or implied by such forward-looking statements and assumptions. Forward-looking statements include our assessment of the overall licensing market in the first quarter of 2020, our annual 2020 and first quarter 2020 guidance, our anticipated pillars of growth and optimism about achieving such growth objectives, reaffirmation of our 2022 royalty goals, higher R&D expenses in 2020, and market data by Del Oro. For information on the factors that could cause a difference in our results, please refer to our filings with the Securities and Exchange Commission. These include the ability of CEVA's IP for smarter connected devices to continue to be strong growth drivers for us, our success in penetrating new markets and maintaining our market position in existing markets, the ability of new products incorporating our technologies to achieve market acceptance, the speed and extent of the expansion of the 5G, Wi-Fi, contextual awareness, and IoT markets, our ability to execute more non-handset baseband license agreements, the effect of trade tariffs and political tensions, the effect of intense industry competition and consolidation, and global chip market trends. CEVA assumes no obligation to update any forward-looking statements or information which speak as of their respective dates. With that said, I'll now hand the call over to Gideon.
Thank you, Richard. Good morning, everyone, and thank you for joining us today. CEVA delivered an outstanding fourth quarter and overall excellent year with revenues and EPS both surpassing street expectations. Moreover, our strong performance, in particular on the licensing front, set the stage for continued growth in 2020, as will be reflected in the annual guidance that Yaniv will share with you shortly. I will elaborate in my prepared remarks on the growth pillars and the underlying technology that are driving this performance. Total revenue for the fourth quarter of 2019 came in at $28.3 million, an all-time record high and significantly ahead of street expectation. A brisk licensing environment along with a strategic customer agreement led to $14.8 million in licensing revenue, an all-time record high for quarterly licensing revenue. We signed a record 21 new agreements, of which 15 were for connectivity and 6 were for smart sensing. 10 out of the 21 deals were with first-time customers. Target users for our technologies are baseband processing for 5G base stations, smartphone and cellular IoT devices, AI and computer vision for consumer electronics, surveillance and automotive, audio and Bluetooth connectivity for true wireless earbuds, sensor fusion for smart TV control laptop and PC peripherals, and Bluetooth and Wi-Fi connectivity for a wide variety of IoT devices. Of note, during the quarter, we signed a sizable and strategic agreement with a very large smartphone OEMs who license our technology for its in-house cellular modem chip development planned to be deployed in its future smartphone. We are extremely excited and committed to this new engagement and looking forward to capitalize on this opportunity for greater market share expansion and royalties for future 5G smartphones. Royalty revenue for the fourth quarter was $13.5 million, an all-time record high. Seasonal strength and new production ramps led to 360 million CEVA power devices shipped in the quarter, also a record high. Royalty revenue for non-handset contributing a record $4.3 million and a record 164 million units in the quarter. For the full year of 2019, revenue came in at $87.2 million, up 12% from last year. Licensing and related revenue was a record $47.9 million, up 18% from last year. We continue to strengthen our customer base with a record 52 license agreements signed during the year, of which 23 were with first-time customers. Annual royalty revenue was $39.3 million, up 5% as compared to last year. Shipment of CEVA-based product grew by 12% year-over-year to more than 1 billion units. Handset baseband shipments were up 3% year-over-year, with a strong second half of the year driven by product launches across all phone tiers. Non-handset baseband continues to expand, with annual royalty revenue up 49% to $13 million and units up 25% to a total of 469 million units. Looking ahead to fiscal year 2020, we are setting 3 key priorities. Priority 1, capitalizing on our recent momentum in licensing to continue to grow our revenue and expand our customer base. Licensing agreement trigger a virtuous circle where new licensees drive royalties, which then free up additional R&D funds for further technology investment, which drive further growth in licensing and royalty momentum. This is where our strategy to synergistically broaden our product portfolio through organic investment and M&A played out so well in the last few years. This was culminated in the step-up in licensing revenue and sustainable growth in royalties from non-handset baseband segment that we are experiencing. To this end, we anticipate 3 growth pillars. The first pillar is 5G. 5G presents a greater growth opportunity than we had with 4G LTE. So our CEVA XC high-performance DSP family, we are set to benefit from the new 5G CapEx investment, which is forecasted to grow by 159% CAGR between 2018 through 2023, according to research published by Deloitte. Another growth opportunity we are addressing with regard to 5G is cellular IoT, which applies to massive connected devices for industrial automation, autonomous transportation, smart cities, medical, AR, and VR. According to recent Ericsson Mobility report, it is expected that there will be 5.4 billion cellular IoT connections by 2025. With our Penta-G and Dragonfly modem platform, we are set to serve these demanding requirements and diverse markets. The third 5G opportunity is handsets. As I mentioned a few minutes ago, we have engaged in the last quarter with a top-tier smartphone vendor maker and have few others in our pipeline. This engagement reflects a deconsolidation in the cellular baseband supplier landscape, where the large OEMs are looking to internalize SoC design that incorporate baseband processors to gain cost saving and differentiation. These customers are turning to us to take advantage of our broad portfolio of DSP and platform. The second pillar is Wi-Fi 6. Wi-Fi 6 upgrade cycle represents a substantial opportunity due to the fast proliferation of connected IoT devices for smart home appliances such as smart TV, smart speaker, connected light bulbs, thermostats, and wearables. Our Riviera Waves 822.11ax IP is at the forefront of this upgrade cycle and used as the reference vehicle for certification by the Wi-Fi Alliance. With more than half a dozen licensees already designing Wi-Fi 6 products and low power IP available for all different segments in the space, we are well positioned to capitalize on the upgrade cycle to Wi-Fi 6 to further expand our footprint. The third pillar is contextual awareness. Contextual awareness refers to the ability of IoT device to collect and process data from its surrounding and adapt its operation to the context. Today, IoT devices incorporate different classes of sensors, such as camera, inertial measurement unit, microphone, time-of-flight sensors, and radars. The data captured from sensor can then be fused to extract device context, such as activity type, intent, proximity, location, and a handful of other experiences. Context-aware features are quickly becoming a key differentiators for OEM in smartphones, PC, wearable, hearable, AR, and VR headsets, robots, and other IoT devices. CEVA is in a unique position to be a one-stop shop for contextual awareness IP as a result of our recent organic R&D investment in voice and DSP technology and the acquisition of Riviera Waves and the Hillcrest Labs business. Priority 2, royalty growth toward our 2022 goal of doubling our 2018 royalty level. We believe 2019 was a progressive year toward reaching this goal in terms of new customer development and new SKUs that entered the production. While the push out of production rollout by one of our base stations customers and partial switch to a non-CEVA modem supplier by large smartphone OEM impact CEVA in the short term, we believe that by 2022, we will reach the customer scale and the CEVA power unit shipment aligned with our royalty target. The strong licensing performance and the contribution of Hillcrest Labs sensor fusion OEM business further reinforce our belief in reaching the target. We are closely monitoring and working side by side with our customers to deploy our technologies in their SoC or product and take it to production. Priority 3, efficiently utilize R&D expenditure for new technology development, and working closely with customers to expedite product development. We are choosing our R&D investment prudently and be agile and responsive to lucrative and strategic opportunities. For this year, due to the step-up in licensing revenue and customer engagement, including engagement with a top-tier handset player, we plan to increase our R&D expenditure by approximately $6.7 million non-GAAP versus last year, which will also include a full year of R&D expenditure for our Hildesheim team. So in summary, I am very pleased with our achievement in 2019. We were determined and consistent with customer engagement and innovative with our product development, which resulted in an exceptional growth year in our annual licensing revenue, ahead of the target we set at our first Analyst Day in January 2019. We are on a solid path for this momentum to continue into 2020. This strong licensing performance and the strategic engagement we have formed with top-tier companies set the foundation for our royalty growth toward our target in 2022. We will continue to come up with differentiated solutions with an unmatched level of integration, like our SenseLink contextual awareness platform or CDNN Invite that expand our footprint in AI. Finally, I would like to take this opportunity to thank all of our employees for their hard work, innovation, and fantastic execution, which has made us a top industry name for connectivity and smart sensing technologies for the IoT industry. I would like also to extend my thanks to our partners, suppliers, and last but not least, our investors for their support. We wish you all a happy and prosperous year. With that said, I'll now turn the call over to Yaniv, who will outline the financials and the guidance.
Thank you, Gideon. I'll start by reviewing the results of our operations for the fourth quarter of 2019. Revenue for the third quarter was $28.3 million, up 32% as compared to $21.4 million for the same quarter last year. The revenue breakdown is as follows. Licensing and related revenue was approximately $14.8 million, reflecting 52% of our total revenue. 40% higher as compared to the fourth quarter of 2018, and up 31% sequentially. Royalty revenue was $13.5 million, reflecting 48% of total revenue, up 24% from $10.9 million for the same quarter last year, and up 11% sequentially. Non-handset baseband royalty revenue reached an all-time record high of $4.3 million in the quarter. Quarterly gross margins was 90% on GAAP basis and 91% on non-GAAP basis. Total operating expenses for the fourth quarter were $22 million, $1 million above the high end of our guidance, mainly due to accrued compensation-related benefits and commission expenses associated with higher 2019 revenues and some provision for doubtful debt. OpEx also included an aggregate equity-based compensation expense of approximately $2.7 million, amortization of the acquired intangible associated with the acquisition of Hillcrest Lab and Immervision business of $0.7 million. We concluded during the quarter the amortization of the acquired intangibles of Riviera Waves, in which we invested in 2014. Total operating expenses for the fourth quarter, excluding these items, were $18.6 million, also above the high end of our guidance due to the same reasons I just highlighted. U.S. GAAP net income for the quarter was $3.1 million, and diluted earnings per share were 14 cents, compared to net income of $2.3 million and 10 cents for the fourth quarter of 2018. Non-GAAP net income and diluted EPS for the fourth quarter came up significantly, 29% and 30% to $6.8 million and 30 cents respectively, from net income and EPS for the fourth quarter of 2018 of $5.2 million and 23 cents respectively. Other related data. Shipped units by CEVA licensees during the fourth quarter of 2019 were a record of 360 million units, up 23% sequentially and up 45% from the fourth quarter of 2018 reported shipments. Of the 360 million units shipped, 196 million, just shy of 200, or 54% were for handset baseband chips, reflecting a sequential increase of 16% from 169 million handset baseband shipped during the third quarter of 2019, and a 45% increase from 134 million units shipped a year ago. Our non-handset baseband shipments reached a new all-time record high of 164 million units, up 33% sequentially and 44% on a year-over-year basis. As for the year, our total shipments increased 12% year-over-year to over 1 billion units, up 5% from 2018, which equivalent to approximately 33 CEVA power devices sold every second in 2019. Annual shipments of handsets increased by 3% year-over-year due to a strong second half, with units up 21% year-over-year for that period. Non-handset baseband royalty revenue continued to grow and reached an all-time record of $13 million, up from $8.7 million in 2018 and $8.1 million in 2017. In terms of units, non-handset baseband units shipments were up 25% year-over-year to a record 469 million units. As for the balance sheet items, as of December 31st, 2019, CEVA's cash and cash equivalent balances, marketable securities, bank deposits were $150 million. We continued our active buyback plan, repurchasing approximately 161,000 shares during the quarter for approximately $4.3 million. Overall, in 2019, we repurchased approximately 355,000 shares for about $9.1 million and fully utilized the share authorized by our repurchase plan from May 2018. Earlier this week, our board of directors approved a new expansion to the buyback plan by a total of 700,000 shares of common stock available for repurchase. Last, our adjusted to ASC 606 DSOs for the fourth quarter continues to be low at 36 days. During the fourth quarter, we generated $8.3 million of net cash from operations. Depreciation and amortizations were $1.8 million, and purchase of fixed assets were $0.8 million. At the end of the year, our headcount was 382 people, of which 313 were engineers, up from a total of 341 people at the end of 2018. Now for the guidance. As Gideon described, our strong and broad IP portfolio highly correlates with the needs of the semiconductor companies and OEMs looking to expand into IoT and 5G. In 2019, we set a new record high in licensing of approximately $48 million, 2 years ahead of the target we set at our Analyst Day in January a year ago. While licensing revenue tends to be lumpy, we believe this momentum continues into 2020, and we expect another step up in licensing revenue in the range of $2 to $4 million. On royalties, we are expecting annual royalty growth in the range of 10 to 14%, to approximately $44 million for the full year. Our projections take into consideration a lower share at the flagship smartphone OEM. However, the lower share will be more than sufficiently offset by new production ramps and growing shipments from non-handset baseband products, including our Hillcrest Labs sensor fusion business. With regards to the recent coronavirus outbreak, we are closely monitoring developments with our royalty customers in China who may be temporarily affected. Our annual guidance assumes a return to normal business and catching up on the yearly basis of this disruption that may take place in the first quarter. On licensing, we do not see any issues and are expecting a healthy and solid licensing environment in the first quarter of the year. On cost of goods, we expect higher non-GAAP expenses of approximately $1.4 million due to a full year of Hillcrest Labs on board and R&D customization work-related expenses from 2 known projects that will be allocated from R&D to cost of goods. On OpEx, with our strong licensing execution in 2019 and even stronger expectations for 2020, we will continue to support these new customers and reinforce our leadership with disciplined investments in R&D. Hillcrest Labs will also contribute its share to the 2020 OpEx on a full year basis. Overall, our non-GAAP OpEx increase will be approximately $7.1 million. Equity-based compensation expenses are forecasted to be about $1 million higher than 2019 and just shy of $12 million. Annual gross margin forecasted to be in the region of 88 to 90%. Interest income is forecasted to be slightly lower than 2019 at $0.75 million per quarter. Taxes are expected to be approximately $1 million on GAAP basis and 15% of pre-tax income on non-GAAP basis. And share count for 2020 is expected to be in the range of 23 to 23.5 million shares. Specifically for the first quarter of 2020, gross margin expected to be approximately 88% on GAAP basis and 89% on non-GAAP basis, excluding an aggregated $0.2 million of equity-based compensation expenses and $0.1 million of amortizations of other assets associated with the Immervision investments. OpEx for the first and second quarter of 2020 should be quite flat and higher than the third quarter due to the timing of R&D grant payments, and is expected to be in the range of $21.4 to $22.4 million. Of our anticipated total OpEx for the first quarter, $2.6 million is anticipated to be attributable to equity-based compensation and $0.7 million to the amortization of acquired intangibles. Non-GAAP OpEx is expected to be in the range of $18.1 to $19.1, also quite similar to the second and fourth quarters of the year. Net income, interest income is expected to be approximately $0.75 million for the quarter. Taxes for the first quarter, $0.2 million, both on GAAP and non-GAAP basis. And share count for the first quarter, approximately 23 million shares. Rocco, with that, you could open the Q&A session. Thank you.
Thank you, sir. We will now begin the question and answer session. To ask a question, you may press star then one on your touchtone phone. If you're using a speakerphone, we ask that you please pick up your handset before pressing the keys. To withdraw your question, please press star then two. At this time, we will pause for just a moment to assemble our roster. And today's first question comes from Mike Wakely of Canaccord Genuity. Please go ahead.
Hi, this is Anthony. I'm for Mike. Thanks for taking the question, and congrats on strong results and the new deals signed. With the 21 new deals, including the large strategic agreement with the handset OEM, any color you can provide on, specifically on the size of the large licensing agreement, and then any sense for how we should think about the timing of these new deals ramping this year and towards your royalty outlook for 2022?
Sure. So usually we don't break down the size of the deals. In our business, we have two flavors of licensing deals. It could be for single use, we call it, one use on a chip for a specific product and a specific market, and a multi-use, which covers the same type of technology but for a wider use. These wider, bigger deals usually are term-based, and so it could be 3 or 5 years, and then you have no limitation of the number of use that you are allowed to use our technology. In a single use, the customer comes back every 6 months to a year and a half, when he wants to design its next chip. These deals tend to be smaller in size, and the bigger deals are the time-based, which are in the millions of dollars per deal. Usually we have a combination. Every year we have few of these larger deals, or sometimes we have renewals. It could be 1, 2, 3 deals like that a year. It depends. So for sure we had one larger deal in this quarter, and then many other, half of the deals are newcomers using CEVA for the first time ever. So I didn't answer your question specifically on that specific customer, of course, but overall we had larger deals and smaller deals in the quarter. On the royalty front, what's interesting is that we expanded our business model. If you remember, we talked about Hillcrest Labs and adding a different flavor of royalties and deals to CEVA. We signed 3 deals for the first time using our sensor fusion technology. These deals tend to have less or no upfront license fee, but because we're dealing with OEMs and not chip vendors, their chips, a deal that we closed in October, is now already in production in the beginning of this year. So within few months, not years, we could see revenue coming from royalties and a very, very quick ROI for this type of technology. So that also helps us with our guidance for growth in 2020 royalty basis.
Got it. Great. Thank you. And then, with Nokia showing some progress on its ReefShark execution, and you, I believe, mentioning working closer with them on the development, how has that changed, if anything, your expectations or on the clarity or the timing of how they will ramp this year and into 21?
So we leave it to them. I mean, we are following them as you are probably, and as soon as they have the silicon part of their business set up and in mass production, we should be enjoying that. We have another customer, ZTE, that is using us and is in production with 4G, ramping up now its 5G solution, and we are waiting for another one to be hopefully more aggressive this year, probably towards the later part as much as we know. But we also get our inputs from publicly from their announcements and follow their development. They have a lot of very interesting design wins, and we are waiting to see the royalty reports come in.
Got it. Great. Thanks again.
Thank you.
And our next question today comes from Tavi Rosner of Barclays. Please go ahead.
Hi, this is Peter Zdebski on for Tavi. Congratulations on the quarter. I just wanted to ask about Hillcrest and Immervision, taking those two together. Are royalties in the back half of the year still tracking at what you had previously expected? And then has there been any licensing contribution from those two businesses? And then also as a follow-up, if you could maybe provide an update on some of the traction you had last quarter in the automotive space.
Yeah, okay. Hi, it's Gideon. Let me take first of all the sensor fusion, the Hillcrest Lab contribution. You need just answer before. There is a distinction between the Hillcrest business, which is OEM-centric, meaning addressing to the end customer, and the CEVA other businesses, which is hardware that goes to semiconductor. So the usual impact of the sensor fusion business is in the royalty and less on the licensing. So when we said we licensed 3 agreements in the first quarter, that's very good news for the royalties. And in terms of royalties, the sensor fusion business tracking according to our expectation and to some extent a bit better. This group of Hillcrest Lab give us very good access to companies in the robot vacuum cleaner, which is a very fast-growing market, in PC, in DTV remotes, and many other segments that we will not expose it with our DSP/other platform, connectivity platform. So the integration with our sales force going smoothly, and we are happy, very happy. You mentioned Immervision. Immervision is an investment that we made in a very small companies. We are engaging with customers, but these are early days in this front. Now, you had another question which I forgot. If you can remind me.
Oh, it was just on the traction that you saw last quarter in the automotive space. If you give us an update on that industry.
Yeah. I'm very happy of our traction in automotive space. I have to admit that it came faster than I anticipated, because this is, as you know, very high entry barrier market and with a lot of conservatism. But we are engaged with a very large OEM in automotive. They took our AI technology, and last quarter we talked about one of the largest semiconductor player there that also adopted our AI technology. Usually these deals are extremely comprehensive and a different clock speed than consumer. If I trying to understand your question, I think that by 2022, 2023, we will have our product in cars.
Okay, thank you for the color.
And our next question today.
Sure, thank you.
Our next question comes from Matt Ramsey of Cowen. Please go ahead.
Thank you very much. Good morning, guys. I guess a lot of different questions around the guidance, but I think long-term, Gideon, I was interested that you called out Wi-Fi 6 as sort of one of the big pillars of longer-term growth for the company. I'm sure you guys saw that recently the guys at Broadcom sort of deemed their smartphone Wi-Fi business as non-core to the company, and it's interesting that that's a place where it seems like you guys are leaning in. Gideon, maybe you could step back and talk about your Wi-Fi business and particularly Wi-Fi 6, the traction of licensing, the breadth of it, who potentially the partners are, and give a little bit of update as to how big of a piece of the royalty growth over the next 3 or 4 years that could potentially be. Thank you.
Yeah, Wi-Fi 6 is now a new cycle from Wi-Fi 5, which used to be called 802.11ac. So our focus, since you mentioned Broadcom, is not in the smartphone. I think in the smartphone it's pretty consolidated there. I mean, if customers, we do have customers asking us about it, but our play is in the IoT. And IoT it's a big collection, and I mentioned in my prepared remarks the smart home. So all those smart speakers, that by itself, it's more than 100 million units so far and growing fast. All smart TV going to adopt the X because there is a clear trend of going over the top. And things that are going into the kitchen, the appliances. We are seeing also people are taking our Wi-Fi 6 and modifying it for lower latency, wants to modify it for lower latency for AR. So we see also the AR angle, which in my opinion will be big, coming through our Wi-Fi 6. We have now 6 deals, 6 customers that are working in those markets. Our pipeline is full with customers that wants to do it. And we in the Wi-Fi 6 have different product line. We have for the very low bit rate, the low end side of it, and up to access point, where you start speaking about residential gateway, enterprise gateway with 8x8 and stuff like this. So it's a billion units opportunity for us.
Got it. Thanks for the color there. Understood on the IoT focus. As my follow-up, I wanted to ask, I mean, obviously there's the fluid and unfortunate situation with the coronavirus. Near term, I think we're all trying to sort of understand impacts to companies. But I noticed in your fourth quarter results, the non-smartphone business for royalty units was up significantly. I know there's been some fits and starts over the last 2 or 3 years with Spreadtrum and Tsinghua gaining and losing share and on their roadmap. If you guys could just give us an update as to the 3G and 4G non-smartphone business in China, royalty opportunity in the near term, and what drove that big upside in the fourth quarter, and is it something that's sustainable, and how should we think about that in the context of the coronavirus situation? Thanks, guys.
So when it comes to cellular, let's say, any devices, we don't make officially distinction between machine to machine, let's call it, and handsets. You mentioned Spreadtrum or Unisoc. They have a play, and we see the progress, and we believe that they will make a progress, continue to make a progress. They lost a key customer, but there are many other ODMs in China targeting India and other areas, and we see the volume up. So if you ask me what we expect in this year about in the handset space, so 4G will be substantial, and I would say growing, and it will be for the coming year. And in 5G, we'll get our shot there. Spreadtrum is advanced in this respect, and we signed a deal now in 5G that will materialize sometime. So we will be in 5G as well.
To give you more color, in Q4, this was maybe pre-virus. This is one of the strongest seasonal quarters we have, both in handset and in the consumer stuff. So this is coming from very strong sensor fusion. This is coming from very strong vision, Bluetooth, AI royalties. So it's a strong quarter for us, and all the different markets worked out well for us in Q4. I still don't think that piece is associated with the virus. Q1, and many companies, including us, will probably see both the typical seasonality of post-Christmas, post-Chinese New Year, and with the virus kicking in, with the people working from home and not in full utilization. So that's where you see more. With that said, our licensing, because it's not coming only from China, is still looking very healthy on a worldwide basis.
Got it. Thanks very much, guys.
Thank you, Matt.
And our next question today comes from Suji DeSilva of Roth Capital. Please go ahead.
Hi, Gideon. How are you? Congratulations on the strong results here. And the tier one as well. Baseband. In that, along those lines, the smartphones, the remaining tier one OEMs, what's the trend here in terms of their own baseband versus merchant? And when a guy like the one you just won ramps up their own baseband, what kind of in-house versus merchant baseband? Shall we expect half-half, or is there a different strategy and dynamic playing here?
In terms of merchants versus in-house, it's hard to know, but we speak with companies, the big ones, eventually, and they see what other people are doing and how they benefit from there, and there is, they all want to do it. With that said, it's a complex stuff, and you need to do substantial investment, but it does give you the advantages of controlling, especially when it comes to 5G, that you can come out with all sorts of different flavors of it.
Okay, so more control of the pipeline there. Okay, great. And then for the royalty guidance more generally in 20, the growth guidance you have, what are the drivers of visibility, or how much of it is Hillcrest layering on versus other segments, and what kind of mix of baseband, non-baseband would you expect exiting 20, just to understand how the two ramp?
Yeah, so on the handset side, we have seen over the last couple of years, there are many moving parts, hard to control. Sometimes OEMs change vendors along the way, sometimes different segments, high-end, low-end is the key driver of the industry. But overall, the replacement cycle is a bit longer, and the market is more mature in handsets. So we're not with one of the bigger OEMs changing vendors in 5G, we're not accounting for growth in our handset basement for this year. It may go up in a few years from different aspects, but for 2020, that's where we see in the last couple of years is a gradual decline, but control of that market. The positive side, which we have seen over the last couple of years, started off from 2016, I believe, 17, when our first non-handset baseband became more significant. We started at the time with 10%, $4 million, I recall, and then went up to 8 and doubled it, and this year another 50% growth to 13. I envision us exiting 2020 with north of $20 million coming from non-handset baseband. So this is one of the key drivers we talked about a year ago in our Analyst Day. This is the way to double the 2018 royalty level that Gideon mentioned in our prepared remarks, and it is coming from a lot of these newer markets. Bear in mind, and we were asked about this later, that we still don't have all the customers, not in the base station reporting to us royalties, not in Bluetooth with 20 deals that we signed just last year. These guys need to get into production. Hillcrest is just for the first time contributing to us royalties for a full year, not only for 5.5 months. And we're seeing more and more progress, and faster than Gideon said, faster than we anticipated coming from that portion. So all these are the positive aspects of the royalties growing at 10 to 14% for this year. And there are more drivers to come, but we don't have exactly the timing and the magnitude of all these other deals.
Very helpful color. Thank you, guys.
Thanks, Susie.
Our next question comes from David O'Connor at Exane BNP Paribas. Please go ahead.
Great. Good morning, Jen. Thanks for taking my question. Maybe firstly, just in follow-up on the last question, what's the expectation for the kind of the royalty weighting, H1 versus H2 in 2020? That's my first question. I have a follow-up. Thanks.
Yeah, good question. Thanks for asking. I don't think we gave too much color about that yet. But if you look at the last 2 years at CEVA, we had a relatively low first half, seasonal-wise, both on the handset side and on the consumer. That's typical. The second half is stronger. This year, for the first time, although we have the coronavirus hitting stronger in Q1, nobody yet knows the effects in the second quarter. With that said, we believe that we'll have a positive year-over-year comparison on top line in royalties and in licensing, by the way, as well, and bottom line as well. So we are starting the year with a positive momentum, with some concerns, macro concerns, mainly around the virus. And the second half of the year, we will see what new products, like we saw in this second half, especially in the fourth quarter, what other customers get into production, in what magnitude, a little bit more moving pieces, and overall, still growth both on licensing and royalties for the year.
David, let me just add, this is Gideon. Last year we came out with 5% year-over-year growth in royalties. This year we forecast 10 to 14% year-over-year growth. So it's more than double than was last year, and this is still without not all the cylinders firing, like you mentioned, base stations, 5G base stations, and all those deals that we signed last year and that still need to gradually get into production. So what we like about 2020, our forecast is there is this diversification and more resiliency to specific customer or specific segment.
Great, that's helpful. Thank you. And then maybe as my follow-up, you mentioned the release of license for baseband processing for 5G base station. Just wondering, is this one of your existing base station customers renewing their license or taking some different IP? If you could give some detail on that, it would be very helpful. Thanks, guys.
David, say that again.
Your quality of voice is not that good, and
licensing on base station, is that the question?
Yeah, the question was around you mentioned in the release 5G base station, one of the licenses there. Just wondering, is that the existing base station customers renewing maybe their existing licenses, or just if you can give some color around that? Thanks.
About the base station customer, you mean?
Yeah.
So, okay. So, we have I would say two very active customers. One of them is already in production in LTE. This is a China-based. The other one is from Europe. They are pretty open about their status, and we are following what they are saying. We do have other base stations customer that I would consider them tier 2, and they are progressing in their market. But the two main customer are, totally can go up to 30% of the market. Specifically about the deal that you mentioned, that you are asking about, Q4 with a new customer. Maybe a second tier, as Gideon said, but a new customer that has never worked with CEVA with any of its technologies, ever.
Got it. That's very helpful. Thanks, guys.
Thank you.
And our next question comes from Gus Richard in Northland. Please go ahead.
Yes, congratulations on the quarter and the outlook, and thank you for taking my questions. Is there a geographic breakdown to the licensing in the current quarter?
Yeah, we usually give it. Let me see. Open the press release for a second. Here we have 10 deals were in China, 5 in the U.S., very strong quarter for our U.S. team, 2 in Europe, 4 in APAC, including Japan. So pretty nice spread all over the world.
Got it. And then in terms of the strategic deal with the large handset OEM, when would you expect that to result in royalty? Is that a 2021 or 2022? Do you have any sense as to how long that would take to get into production?
I wish I could buy the crystal ball on this one. We have seen different examples that sometimes things take longer than you anticipate. It's a complex technology, the complex market. I would probably say a few years. Hopefully not 5, but probably 3 years is very reasonable.
Got it. All right. That's very helpful. Thank you.
If we could do anything to expedite, this is part of the R&D investment that we are continuing to invest over the years, and we are trying to help our customers do it faster, but it's never that simple in some of these more difficult markets.
Thank you. This concludes our question and answer session. I'd like to turn the conference back over to Richard Kingston for any final remarks.
Thank you, Rocco. And thank you all for joining us today and for your continued interest in and support of CEVA. As a reminder, the prepared remarks for this conference call are filed as an exhibit to the current report on Form 8K and accessible through the investor section of our website. With regards to upcoming events we will be attending, these include the Susquehanna Technology Conference on March 12th in New York and the Roth Annual Conference March 15 through 17 in Orange County, California. Please visit the investor section of our website for further information on these events and other events we will be attending. Thank you and goodbye.
Thank you, sir. Today's conference has now concluded. We thank you all for attending today's presentation. You may now disconnect your lines and have a wonderful day.